Well, good afternoon, everyone. Trader Jay here. Just wanted to touch base with everyone and kind of go over the trades that I took today, why I took them, how I set them up, and hopefully this helps uh, everyone learn a little bit. If not learning what to do, again, learning what not to do. So I'm just going to jump right into it. Today is Monday, May 15th, trading the S&P 500 ETF, SPY, SPDR, Spider, as some people like to call it. This is the SPY chart. This is a 5-minute chart looking at the pre-market. And if you've watched some of my other videos, one of the things that I like to do is look at the pre-market and see what's happening. Now, today is Monday, so over the weekend, obviously there's not a lot that happens, but things do happen. And as you can see right here, early in the morning, it just jumped straight up, went from, where were we at, 410.86, somewhere in that range, all the way up to a high of 413.45, all in, what is that, 4 minutes? So major gap up early this morning. And then you can see it just kind of flattened out for the rest of the morning as everyone was kind of waiting to get in. But then, as I've said before, right around 5:30, something always happens. And you can see that first bearish candlestick happen at 5:20, 5:25. Here we are. Oh, sorry, these are 5-minute candles. So 5, 10, 15, 20 minutes is what it took to gap up. But then here we are with these bearish candlesticks coming down, and we can see, the very bearish movement and coming down to touch the 50 moving average here that I have plotted out. So coming into the market open, I already knew we had a bearish momentum, this bearish trend coming in. So chances are the market was going to continue to go down on, when it opens. So what I did is I moved back to my 1-minute chart that I like to trade on. Let me scroll back over here. And I left all my markups here. So we had some interesting stuff happen today. And here we are on the 1-minute chart. And I'm going to show you my markups here. So I marked a line of resistance right here, 413, what is that, 413.29. I also took this mark right here, which was kind of a low, 412.28. This was all in pre-market. So I kind of had a band to start working off of, areas of support, areas of resistance. And as you can see, right here before the market opened, I already dropped below that area of support that I had previously marked out. So coming into the open, I was fairly confident we were already going to continue dropping lower. So it kind of made the entry a little bit easier here. And as you can see, that first minute of trading, again, bearish. But again, as I've said, several times, I don't like to enter on the first bar. You need to let the market shake out a little bit, see what the market's going to do. We've got a lot of people coming in, a lot of people exiting, and it just gets a little chaotic in there. So I normally look for a good signal. So again, already continuing that bearish trend, this was the first bar that opened, pretty good wick in there, kind of went nowhere. Next bar kind of did the same. Third bar, again, still creeping down just a little bit, and then all of a sudden, boom, you see this dump. And on that bar, granted, there was a nice long wick showing some buying pressure coming up, but I knew we were already in a bearish trend. Here we saw some momentum, and I took that trade right in here, and I highlighted it in green so you could easily see that. And it just continued to dump for that next minute, and I got my 15% profit down in here. If you can remember from previous videos, as a scalper, my goal is for quick, small wins, and I like to do that consistently over and over again. Trading with a small account, so I'm not looking for huge wins. I'm just kind of growing this account as an example of how you can be a successful trader with a small account, continue to make small wins. And so I entered that trade knowing that we were still very bearish, already in a bearish trend, was not overly concerned about this big wick that you see here, but took that trade right here in the green at the end of that candlestick when it closed out, and it continued to drop down. Now, obviously, you can see it continued to go down even farther, continue to go down and down and down, right? Again, I'm only looking for those quick wins. Now, this is where it gets interesting, and this is a setup that I haven't showed in any of my previous videos. I'm going to kind of scroll over here. It gets a little bit more dramatic. What we saw after that initial drop was a continued drop. And again, I took my profits in here. But what did we see? More bearish candles, but kind of all hitting a bottom right here. And you can see these two wicks kind of stopped at the same point. This guy came up short, that guy came up short, and this one came right down to that same level. And then another bearish candlestick that stopped. The body stopped right here at that same level of support. And then we saw it kind of climbing up. And we see the wicks coming up here and pushing it back down again. And so I started to draw this channel. Now, what this looks like to me is what we call a bear flag. And it's called a flag because you see this long pole, right? And then kind of this flag shape appear. And a bear flag can be a couple of different things. It can be a sign of a continuation of a trend. It can also be a sign of a reversal. It's all a matter of what happens when it comes out of this channel. Now, as you can see here, this little bearish candle broke out of my trend line. You can see where it closed. All of these, the bodies closed in this channel. A lot of the wicks came down and hit it. And I had already drawn that out. And so it was interesting to watch it continue to play out and hit the very top of that channel, come down, test the bottom of the channel. And then we had this bearish candlestick come out here and break out of the channel. Now, that wasn't enough for me because typically what I'm looking for is a retest. Now, one of the things that I did is I changed my candlestick configuration from the Heikin-Ashi to just a regular candlestick. And what we're going to see here is kind of interesting. Let me get back over here. One thing I don't like about TradingView is how it does this to me. So as you can see, the channel is still the same. We still have that bearish flag, and this candlestick came and it touched the bottom. So I was already working off of this candlestick structure when all of this formed. And so this big bearish candlestick came down, touched the bottom of the channel. That next stick broke below the trend channel. Now, that's not enough for me because typically what happens, and I would say a good 90% of the time when you break out of a channel like this, it's going to retest. And this candlestick right here, the very next one, which almost looks like a doji, a bearish doji, you can see the wick came up and it almost touched that channel. And for me, that was that retest. Now, a lot of times what we'll see a bullish candlestick come up and as the part of the retest. Now, you have to look at what happened here, right? It opened right here, came all the way up, touched that channel, and came back down. So actually, it probably opened here, went down, came back up. I can't remember exactly how this one played out, but you can see it retested, and it came down. This very next candlestick, another bearish one with a wick even farther below. And so I took my trade right here, knowing this was probably a continuation. Normally, I'll wait for that retest, and if it tests and comes back down, that's normally a pretty decent entry point. And this time, it paid off. You can see this wick or this candlestick continue to come down, and then I got a little nervous, right? The following candlestick, I hadn't gotten my profit yet, came right back up to where I entered the trade. Not a good sign for me. So I was sweating a little bit, but as you can see, it came back down, but then kind of stalled out. And again, not a good sign. So I was sweating a little bit, but this is why you have stop losses, you have profit targets. And so as long as I had not been stopped out, I had stuck to my guns, and I ended up getting my profit down in this area, which is a good thing. Actually, I think I actually got it on here, just touched my profit by a little bit. So I was out. And then as you can see, we kind of rebounded. Now, what I started to draw at this point was another trend line. We were still in this bearish trend. And so you can see right here, that trend line picking out kind of those tops. And I drew this way out here to see how it would continue to grow. So after it broke out of this bear flag and continued lower, I drew this trend line. So what I was looking for was a bounce off of the trend line. And here we see this bullish candlestick come up, touch the trend line. The wick was a little bit above it. But again, look at this candlestick. There's no wick on the bottom, right? That means it didn't come down and get rejected up. It just went straight up, and the only wick is at the top. So it came up, and some of the bears came in and pushed it back down. Now, this isn't a huge one, but it is very indicative of what was happening. If you see where that candlestick closed, it was right there on that trend line that I'd already drawn. And the very next bar was a bearish bar, came back down below that trend line. Now, I almost took this trade right here thinking, okay, there's the rejection. But knowing that this was also an area of support, that wasn't enough room for me to take my profit. So I wasn't about to jump in there. And I figured, you know what, let's see if this retests, because it could very easily come down and come back up and retest this high and continue on for a bullish trend. And it's exactly what happened, right? This bullish candlestick came up, touched that trend line, but fell short. And the very next candlestick broke above that trend line. But look at the wick right here at the top where those other two candlesticks had closed. So not a super good bearish entry, right? Now here's one of the things that it typically goes against my rules. My rules are not set in stone. And typically what I always tell people is I don't take puts above, right? Above this 50. I normally like to see it below. It's a better place for me to enter. And so I took a trade right here, right? And it paid off. Now it got a little sketchy right here. Scared me, to be honest. I thought it was going to reverse on me, but I'm glad I stuck with it. And that's, again, the purpose of your stop loss, the purpose of your profit targets. And so took my profits in here. We see that rebound, the retest, and then it came down. And where did this bearish candlestick stop? Right here towards the bottom of this low that we had previously seen. So again, look at that, no wick on the bottom. That means nothing came to push it back up. So when you don't have any bulls coming in, no buyers trying to push that back up, it's a pretty good sign that you're in a good spot. And so what did the next candlestick do? It opened, came up, touched that trend line that I had previously drawn, right? So ding, 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 that's a really good, a good sign that we're going to continue lower because it came up, touched that trend line and rejected. The second that this bar continued to go down below my previous low, I was fairly certain based on this trend line, the rejection off of it, the retest, I was going to continue to go down. And so what did I do? I took that trade. I took a put right here. That was a 411 put. I was already in the money. Took it, and I think I got my profit down in this area, another 15%. So 15, 30, 45%, right? Another winning day. And here I was, let's see, I profited right in this area. So 7:14, 7:15 Pacific time. So a whole 45 minutes into the day, and I've already hit my profit target. And so the cool thing here is we saw something that I haven't showed before. Again, that bear flag, which again can be a sign of a continuation, or it can be a reversal. It depends on how it breaks out of this. But this is a really good sign to look for. And when you can start identifying these type of patterns, you're going to be set up for success much, much, much better. And so those three trades ended my day, 45 minutes into the trading day, and I was done. So I just kind of sat around and I watched the market play out. And so we'll walk through a little bit of what happened. So you can see all of this bullishness, right? So starting to show a bullish trend again. But again, if I was going to enter maybe in this area, this bullish candlestick came up above the 50, but where did it stop? Right here in line with those others. We kind of saw an area of consolidation in here. So I was actually pretty fortunate to get my profit down in this area as it consolidated. So bullish candlestick, again, we see another bearish candlestick right here on this trend line. So for me, I'm kind of looking at it going, no, this could continue to go lower. It could break above. And then what happens, that very next candlestick, boom, sits right here on that trend line that I had previously drawn and just breaks well above. Lots of momentum coming off of this candlestick. And if I was still trading, I definitely would have taken this trade. It had all the signs of a reversal, right? You kind of see this bottoming, this cup coming out of all this consolidation and a lot of momentum going up. And I probably would have I might have even got my profit on this candlestick as it jumped up here, but definitely within these next three. So you see it coming up. This would have been a great area as part of a reversal play to go long. Came up. Again, you see this pullback right onto that 50. Another bullish candlestick, bearish, just breaking below the 50, and then this doji, right? And where does the doji end up? Right, the wick right here at the bottom. So kind of created another area of support and started to come back up. And then look at this one. There, it's a bullish, it's a bullish candlestick, I guess. But the amount of sellers that came in and pushed this back down to stay below the 50 was pretty crazy. And we just see it slowly climbing up. A lot of kind of dojis in here, not doing much. And I saw all this rejection, and I said, this is a good line of support that I'm going to draw. So I grabbed this and I threw it out there just for future reference because I wanted to see what would play out. And again, here I am under the 50. None of these making an exception that I took on either of these two trades here. But we could see it kind of creeping up. I probably could have taken a trade here, but again, nothing that made me want to break out of my rules like these guys over here. And since I'm below that 50 squares moving average, it just wasn't a good setup for me. I didn't feel confident. As you can see, it pulled back before it continued to go up a little bit. And again, didn't really go anywhere. I probably could have made a profit if I'd entered on this candlestick, maybe even on this candlestick as it got up here towards the top. But they're riskier plays. They don't fit my rules very well, and there's nothing in there that said, yes, this is absolutely the time to buy. So I just kind of watched it grow, and we stalled out up here before this big pullback. Again, this candlestick right here, this bearish candlestick, came down, stopped actually right towards the top of this kind of resistance that it saw earlier, and then another candlestick that broke below. Now, one of the things that I was looking at on this one is we definitely have momentum, but this stopped right here, right at a kind of a level of support that got created as it tried to pull back. So again, that's not a great area for me to get into. I'd already created this little line of support here. We were approaching it. Just didn't feel comfortable that would be a good area, so I wouldn't have suggested a buy. And what did it do? It jumped right back up, tried to pull back, kind of retested that low before going back up again. And as you can see, really we broke above, not much going on down here, and then we started to come up, and right here, this candlestick came up right here at the top, right where we'd seen it before. And then that next candlestick, boom, jumped way up, right? That's a really good sign. Problem was, look where it's at. It's at 412.07. And where had I drawn a previous line of resistance? 412.28. So only like 20 cents away. Again, if this is a line of resistance, that's not a trade that I want to take, because there's a very good chance that if it did continue to go up, it's going to reject off of that. So if I was going to take a trade to the long side, I'd probably wait for some type of confirmation that it's going above this area, because I know in the pre-market that had already been set. And so what did we see? Right here, just started to go sideways, boom, 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 boom. And as I saw this starting to play out, I drew a channel. And it wasn't until I hit this new low right here that I said, look, we're in a channel here. We're in a big sideways channel, and eventually something's going to break out of it. So I just waited, right? Patience is the name of the game here. So I marked out these highs that I was previously seeing, and then this low. And I continued this out for quite a while. And look where it all ended up. Every candlestick on the top is just coming right up to this top. And I called that out right here. So right here at 8:45 is where I drew that channel, because it hit a new low before it rejected. So I drew this channel all the way out, and it just continued to ping pong back and forth. We started to see some higher lows, which was a good sign that we might be verging towards the bullish side. Now, another thing that I was looking at right here, where this broke above, it came out of that trend channel, that sideways channel. But one of the things that I looked at was the MACD. And if you see, the MACD is just completely flat with the average. And what that tells me is there's not a lot of momentum out there. The market isn't really moving. It's just kind of going flat. So even though it broke out of my channel, I wouldn't have looked at that to be a good buy. And so again, we saw that ping ponging back and forth and then the breakout. Now, I would look at this and say that's a pretty good buy, except for the fact that, again, that area of resistance right here, probably not the best place to go in. Now, had I taken this trade, chances are I would have gotten a profit here or up in there, and that would have been fantastic. But again, I wasn't in the market, and I would have been skeptical anyway, knowing that I had an area of resistance here. Even though I broke out of the channel, MACD was starting to look pretty positive. And then we had another big bullish candlestick that broke above that line of resistance. Now, what did I say before? 90% of the time it's going to retest. And what did it do? Of course, it came back down, retested, hit the 50, and bounced off of it. And if I was going to be a betting man, well, I wouldn't have taken any of these, to be honest with you. Right here, we started seeing it top out. Right, it created its own level of resistance, and you see this wick here at the top pushing everything back down, and then another one that came all the way back up, broke above the 50, and then another retest right down into here before it rebounded. And right here, I probably would have taken this trade. We came right up above. No, actually, I'll tell you what, I wouldn't have taken that trade because it came right off of this line of resistance that I had previously marked out. So it wasn't until we broke above, I probably would have taken this trade up above that resistance line, and then it pulled back. Wouldn't have gotten stopped out most likely on this one, and you see the continued trend, and probably would have profited up in this area as well. But there we are. That's what time is that? 10:10. Kind of approaching the limits of my day, especially with this sideways channel action. Not something I would have traded in. I would have been out of the market anyway by that point. But here's some trades that you can see. Even as I'm analyzing this chart, I went, oh, I should take that trade. Oh, wait a minute, no, I shouldn't. Sometimes that hindsight is very easy to see. When you're in the moment, it can be very difficult to see. And so, like this one where I said, yeah, I would have taken that. Well, no, I wouldn't. It just hit that area of resistance that I'd previously drawn. It wasn't until it broke above that I would be looking to take it, because knowing that at 412.76, I've got a lot of room to fill that gap up to that next line of resistance that I have drawn here. So, and again, it came up, and you can see it hit that line of resistance. Crazy, huh? It's amazing how these things come into play. And then we see a sell-off, and we go into the rest of the day. But anyway, this was an idea of how I traded the day, why I traded the day. Look for these things like the bear flags, the breaks out of trend channels, areas of resistance, areas of support. This is where you're going to catch your movement. And the question is, how far is it going to move, and how long do you want to stay in that trade? So I hope this helped. It was a good day for me. Another basically 45% worth of trades off of my entry points. And on the whole day, I think over 4% profit on my account. Consistently making 2, 3, 4% on your account will make it grow. And before you know it, when you think of it this way, if you're trading with a $1,000 account and you make 2% a day, well, great. You're making, what is that, $20? $20 on a $1,000 account. Well, okay, it doesn't sound like much, but if you continue to grow that, next thing you know, you've got a $10,000 account, and you're making 2% on a $10,000 account. Well, now you're at $200 a day, right? And these are off of just small trades, single contract type trades. Imagine you're doing 10 contracts. Well, 10 contracts, and what used to be $200 a day is now $2,000 a day. That level of compounding starts to play in, and you start to see the value in being patient, waiting for your trades to show up. Where do you take them and why? So I hope this was a good learning opportunity for you. I hope you learned something. I definitely showed you some of the things not to do and how easy it is to get caught in that price action if you're not paying attention to areas of support and resistance. So always use a stop loss. Set your profit targets. Know what you're willing to lose for the day, where you want to win. If you hit either one of those, it's normally a good idea to pull out. One of the worst things you can do is overtrade. You can take your profits, and your profits can disappear in a heartbeat when you start over trading. And that's why I keep it simple. Few trades a day, take my profits, and I walk away. So again, I'm not a financial planner, not a financial advisor. This is purely for entertainment purposes and what I did for the day. So my experience may not be yours. Previous results are not indicative of future results. So keep that in mind. What worked for me may not work for you. You're going to see things differently than I do. But again, I was working with From the Bottom Trading Group, a great group of individuals, all like-minded, learning how to trade together and bouncing ideas off of each other. And we've got some great people in there that you can learn from, all for free. So please look them up on Instagram. They have a free Discord every morning with live trading. So feel free to join, look them up. And again, this is Trader Jay. Hope you enjoyed my video. And please hit that like button, hit that subscribe button. If you want to stay up to date, listen to my witty humor and horrible jokes. I'll be here all day. Please tip your waiter. And I will catch you guys on the flip side for another day of trading tomorrow, Tuesday, May 16th. Have a great one, everyone.